everyone, welcome to my channel Budgeting for Future. Today we will be breaking down the closing costs of a new mortgage, not a refinanced one, on a house worth $155,000 within the Midwest. I am super excited to share all of that good information with you. We will be going through the complete disclosure statement for the first property our family ever purchased, which is in fact now a rental property for us and is a duplex. And we will be showing you really all the different costs and how they break those down. PMI, the actual cost of them creating the loan, as well as the good old escrows and down payment as well. So if you are interested in that, go ahead and please stay tuned. Let's go ahead and just jump right into it. When I originally decided to do this video, I planned on showing you guys all of the documents specifically, but I took a look just a moment ago and there's just so much personal information on our closing disclosure that I just really didn't feel comfortable showing you the actual document. So I will put up on the screen all the different numbers that I'm talking about and really give you a good idea of what I'm seeing, but it would take me probably like 30 minutes to black out all of this information, and I even started to try to, and then it started bleeding over to the other side. So I am definitely going to make sure that you know everything I'm talking about, but I'm not going to show you the actual documents, and I hope that's okay. If you choose to click off the video, that's fine. Leave it a like before you leave. When we did originally see this house, it was listed at $150,000, and we saw the property within the first 4 days of the listing, and they got 3 other offers on the house by the time that they had gotten our offer. And so we really wanted the property, so we did pay $5,000 more than asking, and we also covered the cost of closing. Now, depending on how your real estate market is in your area, there are times where you can negotiate as to who will cover the cost of closing, which is really all of those mortgage origination fees that we'll be talking about a little bit later on here. In our first home buying experience, we knew that if we covered closing, that we would be more favorably be chosen. But when we bought our second property, which is our personal residence that I'm in right now, we did ask the sellers to cover the cost of closing, which I think typically is, depending on how much the loan is, could be anywhere from a few thousand to a few 10,000s. So we were able to use that as a negotiating tool. So if you are working on trying to get a rental property or a personal property, I would encourage you to meet with a realtor and consider asking them if it would be appropriate to see if someone would be willing to cover closing. But we did definitely cover closing in our first house purchase. And I am not a realtor, I am not a mortgage person. I have no experience other than the experiences of buying these 2 homes, and so definitely if you want really great information, contact a professional. This is just my experience and my family's real numbers. So we did put 20% down when we bought this home, so the actual loan amount was $124,000. So again, a little bit less than that $155,000 sticker price. We did get an interest rate of 4.25%, which was pretty good at the time. It was in late 2018 to early 2019 that we ended up closing on this house. In terms of the monthly principal and interest, we paid originally $610.01 every single month in terms of our mortgage. Now that's the cost of the principal that we pay down on the loan, as well as the interest that we owe the mortgage company. So all in total, it was $610.01. Typically, if you end up putting less than 20% down, you'll have what's known as private mortgage insurance, or PMI. It's actually an insurance to protect the bank if you happen to default on the loan, you don't have enough assets to cover the cost. They insure themselves, and typically I've seen that right around $100 to $150 in that cost. And then once you pay down 20% of the loan, then that will disappear. And we didn't have to have PMI or private mortgage insurance on this property, so it is going to be $610.01 for the rest of the loan, and it won't go up or down in any way other than those escrow accounts that we'll be talking about a little bit later in the video. So we did not have a prepayment penalty, which is good. That means that we could pay down the loan faster, and it is one of our goals to pay down this mortgage loan a little bit faster, and we won't have to pay any penalties to be able to do that. It's also not a balloon payment. If you're familiar at all with ARM mortgages, they're not as frequent these days, but they were really big right before the 2008 housing crash, where you would pay one interest rate for a little while and then you'd pay a much bigger interest rate later on. The idea around them was to make it really easy for new home buyers to be able to manage the payments when they were just getting started in their careers, and then hopefully they would eventually make more money, and then their mortgage amount that they would have to pay every month would go up. It was just one of the messes of the financial crises that happened around 2008. So definitely glad that we didn't do that, and glad that we never were in the market at that time to have to even experience something like that. And so the next part is the projected payments, where again it breaks down that there's $610 that'll be the principal and the interest, and then they estimate the escrow amount. Now they estimated that to be $383.54, which it ended up being more than that, but that is a story for another day. And it's really what they just assumed that the cost of the taxes on the property would be included with the homeowner's insurance that we had chosen for the property. And so we did have what's known as an escrow account, where we will pay our mortgage company that $383 every single month. They'll store up that money, and then when it's time to pay the insurance bill and the tax bill, they actually pay that for you. A lot of people will escrow their taxes and their homeowner's insurance. It kind of just makes life a little bit easier, but some people like to have that cash stay in their pocket and then they just pay those bills themselves. It really just depends on what you want. I think the insurance on this house is right around like $2,000 a year right now, and our taxes on the property are somewhere between like $4,000 or $5,000. So that's quite a bit of money to just like casually save up every single year when those bills happen. So it kind of just depends on your family, what you're interested in. But we like to escrow personally because it makes budgeting a lot easier for me. In total, our closing costs were $4,875.65. And because we did have that 20% down payment, we did have to bring that down payment to closing. So in total, the cash to close, we had to bring $33,606.30. Now, to kind of break down what those closing costs were, that $4,875.65, that's all those different little fees that they like to give you as you go about closing on the house, creating that loan, doing those appraisals and things like that. So I'm gonna go ahead and start breaking that down right now. The first of the fees that we had to pay were the loan origination fees. That's just kind of where they start the process of doing all the paperwork to actually make the mortgage happen. In total, that was $645, and that combined both our processing fee as well as the underwriting fee. Those are where the actual bank is really crunching the numbers and making sure that we're going to qualify and that we have the right amount of assets and that we're correct on our debts and all that good stuff. So $645 just out the door right there. Next were all of the services that we could either shop for or not shop for. Now, we did not shop for any of these, which means we didn't compare prices. And so all in total, we spent $1,578.55 on other fees not related to originating the loan specifically. So to break those down, the first was an appraisal fee. That's where they come over to your house, the new house that you're buying, and they make sure that it's actually worth what you're paying for it. The mortgage company wants to make sure that they're not giving you, a $300,000 loan on a house that's worth like $20,000. They want to make sure that if you were to default on your loan and they had to take possession of the property, they would be able to still sell the property and hopefully be able to cover the amount of money that they lended originally to the homeowners. That was, again, $500 that we paid for that. They also had to pull our credit report, which cost $27.40. We also had to do a flood certification of $7.50. We're not in a flood zone, but I do know that we have a very low water table in our area, so probably just had to do a quick check to make sure that we were not one of the people who do have to pay for flood insurance. They also hit us with a property tax search fee, which is, I'm sure, where someone hopped onto Google and Googled how much our property taxes were in our area and then guessed how much they would be in the future. They charged us $84 for that Google search, which they were wrong about, so that's cool. Next were our different fees that we owed in terms of the title. The first was just the general closing fee for our title of the house, and that was $400. We then had a lender's coverage premium fee, and that went right to the title agency, which was $524.65. And then we also had a recording processing fee, again for that title. So we already had a processing fee for the loan, now we have a processing fee for the title, and that was just $35. So all those fees and totals add up to that $1,578.55. So for all of our loan costs combined, not only for the mortgage origination, but also these other fees that I've been talking about for the title and appraisal and credit check, that equaled out to be $2,223.55. And don't worry, it keeps going. They still had even more and more fees to give us. That's the hardest part about, getting a mortgage and like making an offer on the house. You say, okay, it's gonna be $155,000. Cool, we can do that over 30 years. And then they're like, oh, by the way, here's all these closing costs to get the loan, to make sure the loan's worth as much as it should be worth. And they just kind of keep coming, and you're like, how are you coming up with all these numbers? So it's really important that if you are looking at purchasing a house, you're trying to figure out exactly how much house you want to buy, that you're factoring in the cost of closing into this, because it was about $4,500 for us just to be able to sign our names on the dotted line to get that loan. So definitely do your research. Make sure you're working with your realtor as well as your mortgage company to make sure that you will have enough money to come to closing with the right amount and won't be coming up short. So the next fees were for the deed and the mortgage. We paid $45 to get the deed of the house transferred into our name and $30 to get the mortgage also in our name. Those were government fees that we had to pay by changing obviously the deed and also getting that new mortgage. We also had some prepaids, so a lot of times your mortgage company will have you pay for the first year of anything you've escrowed right on the day of closing. So we had to pay for the year the homeowner's insurance as well as the taxes. These were estimated numbers. So originally our homeowner's insurance was $1,177. It's since then gone up quite a bit, but again, another story for another day. And we also did have to prepay interest. Most of the time when you're closing on a house, you also have to do some prepaid interest. So what that means is that, let's say you buy a house on April 15th, you are required to pay for the interest on the loan from April 15th to April 30th right at closing to make sure that you're paying the interest that you owe the mortgage company for the month ahead of time. For us, we closed on the 31st, the last day of the month. We ended up paying for only one day of prepaid interest, and that was $14.44. So all in total, between the homeowner's insurance for the year as well as our prepaid interest, we paid $1,191.44. Next, we had to start our initial escrow accounts. We did choose to escrow both our homeowner's insurance again as well as our taxes, and in our prepaids we had already paid for our home insurance for the year, so we only had to start the escrow account for our taxes, and that was $1,141.84 just to get that account started. That way they could pay our winter taxes for us when that bill came around. And last but not least, we did have a Realtor Administration Fee, and that was for $235. I'm sure it was just to make sure that everything would go smoothly, and that for our other costs ended up being $2,652.10, making our total closing costs, all of our loan costs, and our other costs were $4,875.65. Now, another fee to think about and to know about as well is most of the time when you choose to buy a house, you will want to do an inspection of that house to make sure that there aren't any leaky pipes, hot wires, the foundation isn't gonna crumble in the next 5 days, any of that good stuff. And for us, I remember ours being, I think, right around $400, but that's the fee that you would pay on the day that you have an inspector come out to the house, typically way before you close on the house, but after you've put in your offer and it's been accepted. That will be all for today in showing you the amount that it cost us to close on our first house we ever bought, originally for $155,000. Today it's one of our rental properties, and we have really enjoyed being in real estate and will definitely be buying more in the future. I'm also hoping to, in the next few months, also share the cost of closing on our personal residence. So if you are interested in that, I would definitely encourage you to subscribe to my channel. That way you are getting to see more of my videos. And yeah, have a great rest of your day.